Good afternoon, everyone. Firstly, our sincere apologies for the delay in the start of the program. Welcome to Transnet's presentation of the annual financial results for the year ended 31st March 2020. Today, we are also tabling our 2020 integrated report in Parliament. The report, as well as our annual financial statements, will be available on our website as of this afternoon. My name is Ayanda Shezi. I've been appointed to serve in the Group Corporate Affairs portfolio and as Transnet spokesperson. I would like to acknowledge our shareholder representative, the Minister of Public Enterprises, Mr. Pravin Gordhan, who is on the call, as well as the Chairperson of the Board of Directors of Transnet, Dr. Pobo Molefe, the Chair of the Audit Committee, Mr. Louis van Ziener, as well as other board members who are online. On the stage with me, I have the Group Chief Executive Officer of Transnet, Ms. Portia Dabi, as well as the Group Chief Financial Officer, Ms. Nongulego Dlamini. We also have the majority of our ExCo in the room. A few are online, together with our extended ExCo. A warm welcome to the members of the media, as well as the investment community who have made the time to join us this afternoon. The program is going to run as follows. The chairperson of the board will give his opening remarks, followed by the presentation by the chief executive and the CFO, after which the minister will then give his shareholder perspective. And at that point, we will then open up for questions from members of the media and our investment partners. Chairperson, over to you.
Minister Pravin Gordhan, the director. Gentlemen, I must say that we thank you for taking your precious time to join us in this virtual session of the announcement of our results. That we are meeting in this fashion virtually is indeed a sign of the times. The global predicament we find ourselves in today, we must say, is extraordinary. It has really upturned so many notions about ourselves and what we are capable of as human beings. The country has lost a lot of people, so has Transnet, to COVID-19. The situation in the world is even worse. But despite all these losses, we have also seen the common humanity and caring for those who are unfortunate, which was displayed by the peoples of the world. There are those things that we call the green shoots of recovery, as it is said. Just this week, we saw that the Chinese economy reported a 5% growth for the period July to September. As a rail, port, and pipeline company, Transnet is directly exposed to global macroeconomic trends, so that this then becomes a good news for us, because it suggests that we are getting exposed to greater demand of our natural products as economies of the world grow, especially that one, China. As a company, we face some daunting challenges ahead of us, and we must address the issue of our long-term sustainability in no uncertain terms. Transnet has performed below its potential in recent years. It's an admission we must make, which has constrained its financial position and left us with little room to maneuver. Inadequate maintenance of infrastructure and the poor and unsystematic approach to the issue of safety and unreliability of our systems has impaired our operations, resulting in inadequate service delivery. The knock-on effects have included declining levels of customer satisfaction, lower volumes, and undue financial pressures. As we report this year, we do so against the backdrop of interesting developments which are like drama played in the theater of the Zondo Commission. And as I have said before, the Zondo Commission has been our own chamber of horrors. Week after week, we have watched and heard the unremittingly appalling testimony of a wide array of fellow citizens. And these testimonies make for depressing watching, and I feel the pain of all law-abiding citizens of our country. Now, since I was appointed to the board of Transnet and as chairman of that board in 2018, I have observed the company genuinely making efforts to correct the mistakes of the past, working hard to clean up the mess that was created in the past, but also beginning a rigorous process of rebuilding. And as we deal with all of those, we collaborate very closely with law enforcement agencies. And our collaboration with law enforcement agencies like your SIU, the Hawks, the NPA have begun to bear fruits. From the point of view of rebuilding, we have fundamentally restructured the executive management team and appointed talented and experienced executives to key positions. And we are satisfied that they have begun to refocus the company on the critical aspects of its business. And they're also curbing spendings, they are validating business cases, and ensuring that we incentivize capital efficiency within the business. We are making progress on all fronts of the company, and I think Transnet, therefore, going forward, is a space to be watched. Let me also address the other elephant in the room, that of irregular expenditure. The qualified audit opinion does not talk to the financial soundness of the company, but does indicate the impact of the legacy of issues of the past to the company. We have gotten another qualified audit report, but as we say that, and you will hear from the team that presents our financials, the qualified audit does not suggest that the company is not performing well. The company continues to deliver good results, and I think we can look forward to a Transnet that will grow phenomenally in the coming period. While immediate remedial actions have been implemented, the new Transnet leadership have arduous task of addressing the legacy matters extending over more than 8 years. But as you will see today, is not all about bad news. There are some very positive and encouraging signs that the business continues to show improvements, particularly in terms of efficiencies, revenue generation, and our contribution to stimulating much needed economic growth. As a transport and logistics SOE, we are facing nothing short of operational paradigm shift. This shift encompasses not only the automation of our operating environment, but extends to how we approach new technological advancements, the Internet of Things, artificial intelligence, and so on. And also how we prepare our people for the changing skills set required, particularly for our younger generation. As an SOE, the lesson of the pandemic has been to bring our developmental mandate into sharper focus. For us, the only sustainable way going forward is to recognize our integral connections to all who make us up our society, and to recommit to the people of South Africa. Going forward, we will continue to strengthen our developmental efforts. Transnet continues to position itself as a key facilitator of trade growth in the region. As an SOC, Transnet will play an important future role in regional economic growth through job creation, skills development, wide-scale industrialization, as well as creating partnerships with the private sector. It is a journey we have to bear together, but one we hope will ultimately be fruitful. On a final note, ladies and gentlemen, I would like to thank Minister of Public Enterprises and our shareholder, Mr. Praveen Gordhan, who represents our shareholder here in this gathering today, for his unwavering support and guidance. He's a very difficult taskmaster who asks difficult questions and does not suffer mediocrity. He demands performance at the best level possible. To the executive leadership of the organization, thank you for stepping up to serve. The task ahead of us is not an easy one, but we are confident in your collective ability to lead this organization to greater heights. We know that you have the passion for what you are doing, you have the tenacity, you have the resilience, you have the determination and commitment. Thank you too to the leadership of organized labor for your willingness to share in our journey together. To all Transnet employees, we value your contribution in making this organization what it is and what it should have been. To our customers and commercial partners, we thank you for your continued confidence in our abilities. Lastly, many thanks to the Transnet Board of Directors for your conscientiousness, your stewardship, selflessness during a challenging year for all of us. Thank you very much, Ayanda. I conclude my remarks on that note.
Thank you, Dr. Molefe. I'd now like to call upon the Group Chief Executive of Transnet, Ms. Portia Dabi.
Good afternoon, everyone. Good afternoon, Minister, Chair of the Board, and the board members, colleagues, and all the staff, and all who work with us, union leadership, investors, and the media. I have to do a bit of a negotiation here. There's a string I don't understand. So what a year it has been. It's been a rough ride in parts. Sorry. It's been a rough ride in parts, but fundamentally one that has been joyful. Apologies, I'm waiting for the presentation to show. The program that we will be presenting today is reflected on the board. I will immediately move on. We learn to deal here. I'd like to introduce the executive. The chair has already indicated. Everybody is either in the room or on calls, and I'd really like to call out their names because for us, and as the chair has indicated, it is one of the most significant events when we had all the team in place. There's Brian Khomo, who is our Chief Executive for Audit, Dr. Andrew Shaw, who is the Chief of Strategy and Planning, Yolisa Kani, who is the Chief Business Development Officer, and then there's our Group CFO. You will hear from her, Nonkululeko Dlamini. Kaya Ngema, who's our Chief of People. Sandra Kutsia, you will see later as the Chief, she's the Chief Legal Officer. Pandelani Munyai is the Chief Information Officer, who has to deal with the burden that the chair has just indicated of getting us properly into the fourth industrial revolution, which we are deeply in. And Vulezane Nemakule, our Chief Procurement Officer. Then I'd like to introduce the CEOs of our 6 operating divisions. Sizagele Mzimela, the CEO of TFR, Ralph Mills, who's the CEO of Transnet Engineering. Then there's Velile Dube on the phone, who is Transnet Port Terminals, our new Chief Executive for Transnet National Port Authority, Pepi Silinga. Then there's Michelle Phillips, Chief Executive Transnet Pipelines, and Kapei Patlamohlaga, who's the Chief Executive Transnet Properties. Kapei, I hope you note, you are listed as a proper OD. Thank you, all of you, for deciding to hitch your locos to our wagons. In the beginning, as you are discovering, the pulling is hard and terribly steep. Sometimes the wagons want to decouple, and we want to swerve and derail. But I am certain and trust, and as you are starting to see, that if you stay strong, pull on, kancane kancane, kukuhle kukubi, and soon the train will settle and we will move forward. That we are confident of, and we are confident that you will be able to deliver that. So I want to talk about our developmental mandate. Sometimes I suspect that this gets perverted a bit, and it is quite a pleasure to see that coming into Transnet, we find an organization that's pretty much on track in as far as ensuring that it does provide value to the economy. Our most important goal is to reduce the cost of doing business and the cost of logistics in South Africa, as well as modernize and renew the South African transport system. In so doing, we ensure that we provide opportunities for modernizing and reindustrializing. And as far as customers are concerned, we aim to be a predictable and reliable customer server who's able to deliver the cargo as and when it is required. One of the key issues we are working on is improving our customer centricity and our responsiveness. And as far as our socioeconomic value, our intent is to ensure that we improve the well-being of the communities in which we operate and in which we live. Activities that enhance the natural environment are going to be a priority. It is with great sadness that we continue to watch the fuel theft that happens on our pipeline and its damaging effect on the environment. As a supplier, and to our suppliers, we intend to have an ethical, fair, and transparent procurement process. We want to ensure that we effectively collaborate with our suppliers so that we are able to develop local industries in which we have competitive advantage. As employees, we may not To employees, we may not have always been this, but we promise to work harder at ensuring that the workplace is one which is safe and that there is absolute integrity. We also commit to ensure that we provide opportunities for all our people to grow, both personally, professionally, and academically. As a financial partner, we are committed to ensuring that our investments provide superior returns, not just for ourselves as a company, but also ensure that they are effective social returns. We also want to be a reliable and credible borrower, which secures its debt on the strength of its balance sheet without guarantees from government. To the shareholder, our value has got to be one where we provide sustainable financial returns. And soon, we promise, Minister Gordhan, we will be paying dividends. That's a fact. We also want to ensure that there's regulatory compliance and that we are accountable and a responsible corporate citizen. Also, what we are actively working to do is to ensure that our infrastructure investments align with government's plan and that they enable the economic transformation agenda of the government. Many of you would know that we are basically 6 divisions: freight rail, we have port terminals, we've got the National Port Authority, there's also Transnet Pipelines, Transnet Properties, and Transnet Engineering, all essential parts to a manufacturing economy. I will briefly go through the performance of all of the ODs, but in the year that we are reporting, Transnet Properties, Kape, was still a division. So it will not be a separate OD for this presentation. I have to apologize to Kape because he said we treat him like a step-step cousin, not even first one step. What we've seen in TFR has been a marginal increase in export coal and iron ore exports as well in terms of volumes. It has actually provided quite some serious improvement in as far as removing speed restrictions on the Nat Core, Cape Core, and South Core. Speed restrictions have the effect of reducing the capacity that we are able to move on rail. However, we continue, as was last year in the last financial period, to be seriously hampered by cable theft. It remains a significant problem. We also experience problem as a result of some of our customers facing shortage demand restriction constraints on their side, and also we are working very hard to see an improvement in locomotive availability and wagon availability. In the case of Transnet Engineering, we were able to manufacture and deliver 400 wagons. We are seeing an improvement in rolling stock availability, but to be honest, we need to see much better. Also, much of the backlog in maintenance has been addressed. However, a core and ongoing problem which we are addressing with vigor is that of pricing and costs from Transnet Engineering. There's now increasingly a very commercial relationship emerging between TFR and TE on the pricing side. However, there are very many opportunities that we see both for TFR as well as for Transnet Engineering, and in these opportunities we see also many possibilities for private sector participation, both in the provision of rolling stock but also in the operation of branch lines. In the coming year, you will see accelerated efforts on our side to ensure that we bring in some private sector operators on our branch lines, and we will be making sure that we provide support from a Transnet perspective. We also see opportunities for multi-user freight terminals and back-of-port facilities provided by the private sector. So we look forward to increased engagements. On the side of TE, we think that there are opportunities for us to export both onto the continent, but also to start increasingly expanding our activities into other areas of maintenance, as you will see going forward. Transnet National Port Authority, an important asset in our books. We've been able to see also improvements in this area. The tugboat availability has improved, as well as we now have helicopters that provide pilotage from Durban and Richards Bay. This is essential for bad weather days. If you didn't think that there was global warming, come and look at the numbers of how many bad weather days we now experience right across the coastline. However, in Transnet National Port Authority, there's a 2% reduction in revenue, which we will be addressing. And as the Director General of Public Enterprises was reminding us in the AGM, that they'd like to see, and in fact we too would like to see, growth in volumes and not having revenue growth just as a result of tariffs. However, an area that we definitely need to pay attention to, because it has a direct impact on the economy beyond ourselves, is the delays of the delivery of capital investment. There too, in Transnet on the National Port Authority side, lots of opportunity for private sector opportunities, for private sector investment, but also for ourselves as a company. The new energy hub that's being talked about in Gucha, we would like to be a central player and developer in. Also, we hope to make real progress in as far as pushing along on Durban becoming a hub port for Southern Africa for containers. We hope to finally push on with Gucha being a transshipment hub. This is a story that we've been repeating for years. For the IDZs, our intent is to strengthen our working relationship between Transnet National Port Authority and the IDZs. In Transnet port terminals, we have struggled in that area. But I must say, if I've learned a thing, that is a tough job. Tough under most conditions, and also under COVID. I have to say that we had some amazing people who work for us in these operations. One of the areas, as I've indicated, this issue of weather, we increasingly find it difficult to operate in the strong winds, so we've started a pilot project in the last financial year in Cape Town that would ensure that we are able to operate even in strong winds. The truck appointment system and staging systems are now live, and we'd like to see a lot more effort paid on productivity and morale improvements. But to be fair, a lot of this requires us to make more investments, not only in plant and equipment, but also in additional training. We continue to suffer an investment and maintenance backlog in this area, and as indicated, the issue of staff training and also licensing of our own staff is a hindrance that we will be addressing with vigor. There are also opportunities in this area for back-of-port operations, both for the private sector, and in certain instances, we will be playing there too. There's also much opportunity for private sector in the port system on the terminal side, and we, in this coming year, will start talking a lot more about what might be available. Transnet Pipelines has generally met all of its performance metrics. We've been able to move all volumes that had been tendered for pipelines, but it has not been an incident-free year. It is in the last financial year that we started to see a fast acceleration in the rate of fuel theft, product theft in the pipeline. We are hard at work dealing with this because its impact is beyond just the balance sheet, but rather has a real deleterious effect on the environment. Here too, we have been paying attention and listening to many of the new entrants which the Department of Mineral Resources and Energy have brought in via licensing, where there's been a growth in demand for third-party storage facilities, both at the ports as well as inland. We'll be making sure that we deliver on this in the coming years. I won't stay too long on this because it's an area that we've spoken about, but I just felt it was important that we should once again pay homage to the many, many, many men and women who work at Transnet, who from the beginning of January 2020 came together and established a response team, and that response team became our command center, and whatever they said we must do, we did, and whenever we reported back that we were having problems, they went and they sorted out the problems. Thank you in no small measure to that team, and they know themselves wherever they locate themselves in Transnet. And thank you too to the Department of Public Enterprises and the team in government who responded quite quickly whenever there were constraints in the process. I do want to pause just for a second to remember that despite all of our efforts, everything that we did, ensuring that all of our staff had PPE, ensuring that we always kept to the principle of safety first for our people. We still lost 41 people, 42 with a board member in more recent time. Our much-loved pillow pepper train went around the country to as many rural areas as it could, and also to Kwamashu Township, and that was really interesting. Thank you very much, Mayor Letlape, and the people from the Solidarity Fund who pushed and made sure that we were able to use our loved train. So in summary, our sustainable development outcomes, we have a staff complement of 56,414 people across the group. We have a 70-30 gender split across the organization. We have been able to employ people with disability up to 2.2%. We're still below the target set by the shareholder, and frankly, still below the representation of this population in our country. On skills development, 238 young professionals in training were appointed to operations in Transnet. We gave 60 full-time engineering bursaries. We saw a 10% increase in African employees in the organization to 76.35%. Black women are increasing as well at 28%, which is encouraging and good progress. And as far as I've indicated with the pillow pepper train, 105,565 patients were aided in all of the clinics in the train. We also saw 357,323 individuals at all our community health care programs. This is an area that you will see, to use my kids or the kids, zooped up in the next couple of months. We are of the view that we could better utilize our clinics to ensure that we provide primary health care services not only to our own staff, but to the communities in which we operate. Regional integration, Yolis and Ralph, we need to see a little bit of magic. We only did 166 million last year. However, this is an area where we need significant support, both from the IDC and the Department of Trade and Industry and Competition. It remains an issue for us to be able to fund some of these opportunities on the continent, because demand there is, but capital is always in short supply. Environmental stewardship is an issue that is of great concern to us, and we will continue reporting and doing better. Our total energy consumption in the last financial year was 19.88 tons per gigajoule. This is an area of quite significant cost for us as a company, and we are looking to see how we might be able to further reduce the cost on the one hand and also our carbon footprint. On the health side, on the measure that we generally report to on safety, the disabling injury frequency rate, we are down at 0.73. However, we still have to do much better. I'll indicate the changes that we are introducing. Regrettably, for the period under report, we lost 6 employees. Never an appreciated moment whenever we receive those notices. Nobody comes to work not to go back home. Deep condolences to all of the families who lost members in this period. On industrial development and our capability development, we have spent 840 million on supplier development. We have invested in 2 hubs, which we will be watching to see if they generate any benefit. In 2 municipalities, Saldanha Bay and Richards Bay. If they don't generate opportunities, we will be reviewing our strategy for supporting small, medium enterprises. In as far as transformation, we are doing really well in as far as gender representation at ESCO. We are off target at 50%, and in fact, frankly, we're off target virtually on all measures. But I'm pretty certain that you will struggle to find another company in the South African economy which has as broad and as equal a representation of females in the senior positions. We have to do better in the junior levels, and we have to make sure that the workplace is better able to accommodate not only women, but also people with disabilities. We've been able to meet most of our targets on skills development, as is reflected in the table below. On safety, as I've indicated, DFRI is the core measure that we use. We're below the global benchmark of 1 at 0.73 and below the target that we've set internally at 0.75. However, in the period coming, we will be starting to report on near misses and lost time injury frequency rates. The safety function has been elevated to report directly to the Chief of People, and one of the areas that we will see being introduced is a safety investigative capacity, so that we may be able to arrive at a scene or an accident, derailment, or whatever it might be, and start to better analyze the causes of the accidents so that we may be able to learn from these. The intention is not punishment, but rather to learn so that we can better hardwire safe operations into our operating ethos. We will also, as a matter of urgency, be setting up a safety committee at EXCO, which will review all of our safety interventions, but also be the place where the learning happens on all of these safety incidents. I will hand over now to Nonkululeko to talk us through the financial performance for the year in review, under review.
Thank you, Portia. Honorable Minister of Public Enterprises, Minister Godan, the Chairperson of the Board, and the Board members present today, my fellow EXCO colleagues, members of the media, members of the investment community, good afternoon. I'll be touching on some elements that are in our financial statements, in just giving you a sense of how we have performed in the financial year past. Our SENS announcement is out right now, and as I mentioned and refer to some pages, you would be able to go there and look at the numbers yourself. The financial year that ended at 31st March 2020 was challenged in so many ways with the subdued economic conditions and many other issues, even though we had not yet felt the impact of COVID-19. Transnet, although in that scenario, managed to deliver quite solid performance under the circumstances. And if I can just share with you some of the highlights that we saw coming through. Transnet posted revenue of 75 billion, which is 1.3% than what we had achieved the year before. This is very significant for us because it just highlights the stability in the revenue generation ability of the entity. This was 2.9% increase, largely driven by tariff, even though we will highlight that we had some challenges in terms of the volumes that we wanted to put through. The net operating expenses is an area we do watch quite closely. Our costs are generally or highly fixed in that 60% of our operating expenditure is driven by manpower costs. We have managed very closely in this area in that in the previous financial year, that is 2019, we ensured zero increase, and therefore an increase of 1.9% was coming from a low base. Having said that, we continue to look for areas of improvement and areas of efficiencies to ensure that we can reduce the cost of doing business for the South African economy. The Ebitda was at 34 billion, which is 0.7% compared to the prior year, although our Ebitda margin was a bit down, but again, a sterling performance. Our net profit was impacted by fair value adjustments that we had put through the prior year, which were not necessarily continuing, a once-off event. and therefore, on the basis of the normalized number, we posted profits of 3.9 billion in 2020. We continued to invest in our infrastructure with capital investments of 18.6 billion, significant portion to try and maintain our assets and also to try and get into new capacity. We continue to be a very strong cash-generating business with 35.9 billion, up by 2.1% from the prior year. We also monitor our gearing quite closely. We are a self-funding entity, and we've continued in financial year 2020. Our gearing was at 47.6% for the financial year, and we continued to get an interest cover of about 2.9%, which is significantly higher than what we have as a covenant with our lenders. In terms of looking after our people, we invested about 2.7% of our operating expenditure in training, which benefited basically our artisans, engineers, as well as technicians. We are a level 2 rated BBBEE entity, and in that manner we spent about 31 billion that was recognized as compliant in terms of the BBBEE requirements. If I can just unpack the revenue line a bit, we have seen steady growth in the past 5 years, coming from 62 billion in 2016 and at 75 billion in the current financial year we are reporting on. Transnet Freight Rail is our significant contributor, being the largest business, and has contributed 51% in the revenue line. Although the volumes were down in various elements that we deal with, we continue to work on improvement in this area. Just to give you a sense of our operating expenditure, indeed, personnel costs contribute 57% to our expenditure. We spend on electricity costs for our wagons and trains. We also have to drive maintenance, and that is the order really of the top 5 of our expenditure. As I indicated, we are looking for opportunities to be more efficient. We are looking at reducing the use of professionals and consultants where we can do the work ourselves. We are also looking at discretionary expenditure that talks to travel, printing, given the 4th industrial revolution that was spoken about earlier, to ensure we can drive efficiencies in how we are running the business. In terms of investing in our assets, we have put in the 18.5 billion, as I highlighted earlier. Our assets continue to be aging, and this resulted in rail infrastructure and port infrastructure having to be devaluated. But it also talks to the economic conditions that are quite tough in terms of the outlook in the revenue line, which has resulted in us looking at the impact of this in our asset valuation. In terms of how we've invested this capital of 18 billion, 76% went into our rail requirements, and 74% in a different slicing was to support general freight requirements. In driving the capital investments, and it's an area we are again focusing on to look for efficiencies to deliver the projects on time, we look for ensuring that we ensure safety for our people. 6 people were highlighted as having lost their lives in the year past, and therefore we do want to make our working environment safe through maintaining the assets. But also we want to prioritize capital investments that would ensure operational capacity and volumes are improved. We want to collaborate with our partners in our customers to look for investments in the areas that they are also seeing growth and volumes in. We have a responsibility to ensure localization as we drive this expenditure, but also, most importantly, we need to drive the process of delivering on cost as well as on time, as we would have set out in our business cases. Transnet has continued to work with our investment community in raising funding on the strength of our balance sheets. In the past year, we raised a total of 11.8 billion, and this money was raised without any guarantees from the shareholder. The last time we ever requested a guarantee from the shareholder was in 1999, and the balance that still carries that is 3.5 billion in a total of borrowings in our balance sheet of 133 billion. So we are totally self-funding in the sense that we are working off our balance sheet and there are no guarantees, and we continue to work on that approach as we look at the next years. We also managed to pay back 13 billion that fell due in the current financial year without requesting any deferments from any of our lenders, and therefore we will continue in this approach. Our lending, our borrowings are largely split into local and foreign, about half-half, and as such, we have to, at financial year end, mark to market such foreign borrowings, and it resulted in the 6.8 billion that we have recorded. Linked to our borrowings, we work with two rating agencies, Moody's and S&P. We have kept very close engagements with both of them, more especially in the context of COVID, where there were concerns in relation to whether entities would meet their obligations. At the moment, Moody's is rating us as a standalone at BA2, whilst at the sovereign level, we link on the headline rating at BA1. This is one notch below the sovereign rating, and S&P has rated at BB-. This is 2 notches below the sovereign. We continue to work closely with them to ensure that we can give comfort that the lender's money is safe with Transnet, and we continue to raise money still with these ratings, but we are working very closely with them. I would like to move off the financial performance of the year and focus on a specific matter that we have highlighted in our financial statements. As a state-owned entity, we are required to comply with Public Finance Management Act, and one of the requirements in a specific section, which is 55 and 51, we are required as an entity to ensure that we prevent, where it has occurred, we must identify and report any fruitless and wasteful expenditure or irregular expenditure or any losses that may have arisen as a result of any criminal conduct. But also we are expected to collect all of the revenue that is due to the entity. As such, we are obliged to also, as we go through the financial audit, ensure that this area is looked at very closely by the auditors. In the past 3 years, this has been an area of focus, both from management and the new board, as well as the auditors. As I indicate, we always have been, as Transnet, obliged to comply with PFMA. However, in 2018, we saw an increased focus in reporting on irregular expenditure. And in the process of improving on reporting, the auditors also were concerned that the reporting was not complete. Even though we had been audited over the years and had not been qualified, the audit issues that were raised in 2018 date back as far as 2011, 2012. After the audit, there was much more focus in this area, and mainly driven by the fact that the audit process resulted in a qualified report where the auditors were uncomfortable that what we reported as irregular expenditure was complete for that financial year. In 2019, with the continued effort and the remedial plan to deal with the issues that we had picked up, there were further issues raised, and these were specifically related into our use of supplier development as a pre-qualification for tender. The auditors raised this issue, and we reported as much as we could. However, again, it was a concern of them that they still found areas where we had not completely reported, and again, they qualified the audit report of 2019. The efforts to improve continue. However, it is very clear that we have not fully arrested this issue, because in 2020, with the issues that we work on, there were still issues of incomplete reporting. And I'll give you a bit of a detail in the slides, 2 slides down. Having faced these challenges of qualified audit opinion, already in 2018, a remedial plan was put together, and it was to focus on system-related issues. As it was indicated earlier, we are a fairly manually driven organization. We had to enhance governance and many other areas that were actually impacting this area. What we have noted, though, in the 2020 audit, having looked back to 2011, we have realized that there is actually a significant amount of work we need to do in order to arrest this. As we continue to run the business on the basis of active contracts that we may have placed as far back as 2011, 2012, we have realized that we have to come through a total of about 13,000 contracts to determine whether any of those contracts carry any irregularity in the way that they were placed. And therefore, this mammoth task has required that we do quite a lot of work in identifying the basic issues that need to be fixed in the supply chain management. And through this newly appointed CPO, there's a significant overhaul that is being driven in the supply chain management. Secondly, we've had to look at our lines of defense, including the fact that for the many years, internal auditors of Transnet were outsourced, and some of these issues were actually there but never picked up. We now have brought in Brian, as Portia was introducing him, to ensure that we can get this function to be internal and for it to assist us to arrest this problem. Thirdly, we have specifically went out and got someone that is going to assist us in complying with the framework. And we are fortunate that it is someone that has worked in the national treasury space, understands PFMA, and the role is to ensure that she assists us in identifying the root causes, assists us in reporting, but most importantly, ensure that the consequence management is followed through. Her name is Lindile Kubeka, who was previously the CFO at the National Treasury, and she'll be joining us from the 1st of November. We are indeed trying to also strengthen the lines of defense in this area, as I indicated. But as I mentioned, the 13,000 contracts, it is clear that we have quite a huge task ahead of us. And therefore, we cannot say it will be gone tomorrow. We are putting all efforts to ensure we deal with it. And therefore, it may take a bit of a while. We have improved reporting, as I indicated. If you look at our financial statements in note number 39, you will note that we have reported cumulatively a number of 114 billion as irregular expenditure. This is coming from an effort to identify expenditure that relates to where we would have utilized pre-qualification in the tender process where we would have used supplier development as a pre-qualification as far back as 2011, we have reported about 51 billion in this area. But also when the regulations changed in 2017, there was an issue where we still used tender pre-qualification from the supplier development, and we've reported a total of about 3.8 billion in this area. The locomotives in terms of 1064 is a matter that is being dealt with, including at the state capture, but we've reported a 43.6 billion in this area. And the rest of the challenges that supply development is experiencing have contributed 15.8 billion. I do want to highlight that these numbers I mentioned are cumulative and largely come from the contracts that would have been placed prior to 2018 that are still active and that we continue to draw from. From the moment a remedial plan was put in place, we have seen that the new contracts are contributing much less to the need to report any irregular expenditure. And therefore, the fact that the financial statements of Transnet are qualified is not because we've reported 114 billion, but it is because there may be some contracts that have irregular expenditure that we may not have reported on, and we continue to do that work. I also want to highlight that the qualification is in relation to the PFMA and is ring-fenced to Note 39. In terms of our compliance to IFRS, we do not have a qualification, and we are not having to go and restate our financials in any way, although I highlight the fact that in relation to PFMA, we are required to look at our contracts as far back as 2011. This is a matter of making sure we arrest the issues of the controls, the systems that we did not have at a point in time, and therefore the audit is not qualified in relation to reporting for IFRS purposes. In terms of just the forward-looking and the experience in COVID, Transnet has continued to be a resilient entity. We experienced the lockdown like many other entities, and some parts of our business were totally closed down, and some operated at 50%, but we continued to see revenue coming through as we were also declared an essential service. For the year that we are in, we are going to be releasing half-year results, and at that point in time we will share more with our investors and the community in the media space, our performance. However, we can confirm that this was a requirement of the audit to ensure that Transnet is still seen as a going concern by the board, and that the auditors confirmed that. And based on the performance post-COVID from March until round about August, there was comfort that Transnet will continue to be a going concern in the foreseeable future. And the performance beyond 31st March highlights that even though we performed at about 60% of revenue at the beginning of COVID, we've seen improvement over the months, getting to over 90% of the corporate plan that we had set ourselves at the beginning. We also were able to convince and confirm to the auditors that we'll continue to meet our obligations as they fall due in terms of the payment of our maturing debt. And therefore, this slide, forward-looking, confirms that even in the context of COVID, we've been able to confirm the going concern status of Transnet. Portia, thank you. I will stop at this slide.
Thanks, Nonku. And I'd be remiss, Nonkululeko, if I didn't thank you especially for the fact that in your first month you were both a CFO on our side and you were helping the IDC, and despite the shortness of the time, you've been able to get on top of the issues at really short notice and be an invaluable member of the team. So thank you very much. I know it's been tough in the recent while. We thought, though, we would end on a happier note, guys. We're not entirely depressing. We have a very big investment in R&D inside Transnet. Our focus areas are in reducing the cost of doing business, reducing imports when economically viable, and this is our contribution to industrialization, and moving Transnet towards being a smart system. I think first and foremost we need to have a trade fair inside Transnet so that we can get our colleagues in TFR to see what we're doing inside TE. There's a lot of investments, it's an internal joke, there's a lot of investments that we are making around renewables, energy storage, in-cab communication systems, machine vision for drivers, absolutely essential. We would invite many of you to actually participate either in a trolley ride one day, so you have a very real sense of some of the challenges that our train drivers experience. Quite a lot of work, and in some of these areas we would be looking to partner with the private sector. We've already started talking to the auto sector via the components industry and the association NARCAM to see how we might jointly work together so that we leverage the investments that are in the auto supply chain as well as what we have on rail so that we create the bulk for growth. But really exciting work, and really exciting work being done by young people at the various universities in South Africa in collaboration with the team of Transnet Engineering. We've also made our own investments, designed the first Transnet hauler, which is at port. It's an in-house design. We'd like to see TPT buying a lot more of our production and not forcing us to go competitive vule. We would appreciate that. But this is all work that's been done in South Africa today that we don't highlight. It takes a lot of money from us. I think we have 120 engineers who are focused exclusively in this area of R&D. So I thought I would just reflect, I suppose, create a sense of where we come from and then also where are we going to, because the future is actually quite bright. Where we come from, we've seen a high level of investment in locos and wagons. Unfortunately, we did not have a commensurate investment on rail network. This has meant that in the next while, we're spending a lot of time looking at how we balance the investments that is absolutely essential for the system, and this is actually what has created quite a lot of opportunity for private sector participation in our value chain. We've also had large cost overruns on major capital projects and sometimes, frankly, have failed to deliver on those. The volumes we had anticipated have not come back, and also the historical growth projections just never materialized. What we are now doing in the current, and it is quite unfortunate that we're in a situation where South Africa, which was the preferred way into the world for the continent, has become a default global gateway. We need to reclaim the space, but we don't reclaim the space by not focusing on sorting out the basics. In the next while, our capital investments will focus on maintenance and improving existing asset capacity, and therefore much of the expansion capital we will be making sure is project financed or financed in partnership. The Chair already indicated there's a rigorous process to re-evaluate some of our demand projections so that we get more realistic in the forecast going forward, and we avoid the swings and the troughs that we create for the private sector, actually, more than even ourselves. We are in the process of refining our group-wide capital allocation processes. You will hear us going on in the next couple of months about zero-based budgeting, which we are introducing, which is absolutely crucial as well as we prepare for rail regulation at some future date. We need to improve the process by which we incentivize both our people as well as the market, looking at capital efficiency. So what is the future? We need to deliver more effectively. We must align to the customer. We must crowd in private sector investment and ensure that we avoid any cherry picking, both by ourselves as well as by the private sector. We must contribute, and we see ourselves contributing actively towards South Africa's developmental goals in the 5 areas with regard to industrialization, regional integration, the economic transformation, energy efficiency, and socio-economic development. Building resilience in a post-COVID world will stand on 3 pillars. We will fix the core, we will partner for growth, and we will also drive towards operational efficiencies. In closing, I have to, in particular, talk to the people, to those of the 414, yes, I know you can go and laugh at me now, 414 who work at Transnet. Hard decisions have to be taken in the immediate. We must fix our image and reputation. We must, though, remind each and every one of us that we are inherently good and trustworthy. And this was said by an economist. It blew my mind. Sir Robert Frank, you rock, I would say. I promise that the hard decisions will be taken fast, so we move quickly to settle and do what we know how to do. We know how to move trains, turn around vessels fast, and partner with integrity. Siyabonga.
Thank you to the Group CEO and the CFO of Transnet. Those are the financial results for the 2019-2020 year. Solid financial results in spite of the challenges that the company has faced. I would now like to request the Honourable Minister of Public Enterprises to give us his shareholders' perspective. Minister.
I think the Chair wanted to say a few words. He still wants
No, Minister, I have spoken. I was simply going to introduce you, but to also say to those gathered there here at this event that we had a meeting with you, with the Minister this morning. It was a very robust discussion. The good thing about it was that we could tell each other what is wrong and how do we get things right without anybody sulking at it. I think I enjoyed the meeting this morning with you, and I'm sure the executive team felt also motivated. Let me take the privilege, Ayanda, to use the protocol system of government and say that it is our privilege to present to Minister, then to share with us your perspectives. The nice things I said about you are not intended to persuade you to say nice things about me and the board. You must continue to be as frank as you have always been. Thank you, Minister. Thanks, Ayanda.
Thank you, Chair. It's been a long day for most people, so let me greet the Chair of the Board, who's still hiding his very white beard, so he should show it more often. Members of the Board who've made a tremendous commitment to working in the public sector and assisting to steer Transnet to the point where it is today, to the brand new CEO, CFO, and the management team. Welcome to Transnet, and thank you for the excellent results that you have outlined to the public today. To the family of Advocate Motaung and the other 40-odd members of staff who have lost family members in the past year due to COVID and other ailments, and to members of the media, employees generally of Transnet and the trade unions, and the business organizations and institutions that partner with Transnet. I just want to make a few points, the first of which is to reinforce that this is an excellent performance by Transnet, both in terms of producing a profit of 3.9 billion rands, for being a cash-generating business, and importantly, at least for once, we can talk about an SOE without the use of the words bailouts and guarantees. And one hopes that Transnet will be able to sustain that well into the future. And it's in that sense that I feel very optimistic on behalf of government that Transnet has begun the process of moving into a new era in the many ways in which the CEO and others have spelled out. So without boring you, I won't go into those details, but this certainly marks a point of departure in terms of the journey that Transnet needs to make going forward. Secondly, we certainly do look forward as a state to the payment of dividends. We did debate that quite intensely this morning, and the commitment that the board made is that at its mid-year review, it will look into this matter again. And it's an important precedent that an institution like Transnet should set for other SOEs as well, as they begin to get to better health, both financially and operationally as well. I would request the CEO a little bit later to mention the question of lifestyle audits, the extent of compliance that Transnet has enjoyed, which is very encouraging, but equally importantly, the commitment of the bargaining unit employees and their representatives to undertake lifestyle audits lower in the organization as well. And this is, again, precedent setting as far as SOEs are concerned. The conclusion or the concluding slide that the CEO used is a very important one. It is one which says that what Transnet is doing and intends to do into the future is very much aligned to the President's Economic Reconstruction and Recovery Plan. So if we look at each element in the plan, firstly, Transnet's contribution to the network industries, both in terms of rail and ports, you will see that the improvements that we are looking for in Transnet are in line with the commitments that the President made. And within a year, we will see a significant difference in relation to the cost of doing business in South Africa. Secondly, if we're looking at the investment picture, Transnet is already investing in the last financial year some 18 billion rands, and we hope that as its strategic future is determined in the next few months, that investment number is going to significantly increase. And in the plan, the President talks about unlocking investment and growth, and what you will see are opportunities for various segments in the private sector, including small and medium-sized businesses, to make a contribution both in the Transnet context, but in the context of the national economy as well. So in that sense, there's significant progress. Zero budgeting is often regarded as a very difficult exercise, but it is one that, again, Transnet is leading in respect of. It is not a small matter. It does make a huge difference in terms of examining very carefully the cost structure of big institutions like Transnet and other SOEs as well, and is an opportunity for boards and the management teams to come to grips with the cost elements within their organization and make every effort to reduce those cost elements and excessive wastage that we might find in the institutions. So a year from now, that zero budgeting exercise will be an important signal as to how to do business, not only in the public sector, more generally speaking, but amongst SOEs in particular. And it's a practice that we want to encourage across all significant SOEs so that we understand what the balance is between revenue on the one hand, cash generation as part of revenue, but importantly, the cost base upon which tariffs and other impositions on the economy are actually mentioned, or rather take place. Two last matters. One is the issue of procurement. as we all know, that what is being disclosed in front of the Zondo Commission under the chairpersonship of Deputy Chief Justice Zondo over a period of time, but more latterly as well, is the extent to which procurement practices were repurposed in order to extract billions of rands from institutions like Transnet, Eskom, Denel, and many others as well. And so one of the issues that arises is what are the consequences for those who have been responsible? And as far as the shareholder is concerned, those responsible for years of malfeasance that seem to go back to the period around 2011, should actually pay the price for the manner in which they, on the one hand, extracted money, on the other hand, contributed to the malfunctioning of these organizations or the repurposing of the organizations for the purpose of actually stealing money from the state, whether they were employees, board members, who today suddenly have a lot of amnesia about their role in the boards that preceded the current board, but also those outside elements who have benefited through their connections on the one hand and through the kind of nefarious deals that they struck on the other hand. That then is connected to the last matter I want to raise, and that is the role of auditors during the period of state capture. The current auditor was in the Transnet system since 2012. And there's a lot that the auditing firms have to explain to the South African public, and indeed their own profession as well, about why they kept silent and did not penetrate the veil of corruption during the period 2012 onwards in respect of institutions like Transnet, but Eskom as well, and disclose fully, properly, and courageously the extent to which procurement was refashioned in order to serve the purposes of state capture and corruption. And it is in this regard that a lot has to be accounted for by the accounting firms and auditing firms for the manner in which they have practiced their duties and fiduciary duties in relation to both the institution on the one hand, but the business sector as a whole on the other hand as well. So let's come back to the positive side. I'm very confident that in the next few months, Transnet will be setting a whole new direction for itself, some of which has been indicated by the CEO, that we will see a significant transformation through Transnet, amongst others, of many of the economic activities that take place in this country, and that the beneficiaries of that process must be both the employees and citizens more generally, and of course the business sector that gets involved with Transnet as well. But one of the challenges that we have in this country is that the beneficiaries of these processes must not be a small elite that, in a sense, participates in these processes in order purely to benefit itself without looking at the 60 million people who need to be attended to, whose children need to be empowered, educated, and given opportunities in a fast-changing world and a radically changing socioeconomic and technology environment in which they're required to operate. So as the President has said, not only do we want to use the reconstruction and recovery plan for the purposes of combating the impact of COVID on the economy, but as we rebuild institutions like Transnet and indeed the economy as a whole, let's rebuild it for the purposes of serving South Africa as a whole and allowing all South Africans to benefit from that which accrues from the growth of Transnet and similar institutions and the economy as a whole. So once again, my congratulations to both the board and the management and employees of Transnet, and we assure the various customers, so to speak, of Transnet that they can expect ever-improving service, quicker turnaround times, and hopefully cheaper tariffs as well as part of Transnet's contribution to reducing the cost of doing business in South Africa. Thank you very much.
Thank you very much, Honourable Minister. We are now going to open up for questions from members of the media and the investment community. The Minister, I'm told, has another engagement shortly, so he may not be able to be with us for the duration of the Q&A. The Chief Executive and the CFO are joined by the Chief Legal Officer, Advocate Sandra Kutsia, to respond to your questions. The board members on the call will also be available to take your questions. We will take only 2 rounds of...
We're around the next 10 minutes to answer any questions, so I don't create any perception that I will duck the questions, Michelle. So I'm
Okay,
around.
thank you, Minister. So we will take 2 rounds of questions, 5 hands in each round. Please could you raise your hand using the hand icon on your screen? We won't be looking at the chat at the written questions. I've got 2 hands. We'll take Suren Naidu, followed by Terence Krima. Those are the 2 hands for now. You can go ahead, Suren.
Good afternoon, Ayanda and Portia and team and Minister. Just in terms of future, the Portia highlighted getting private sector involvement in the rail and ports. Is there any way that Portia can give a little bit more detail, because it seems to align somewhat with the finance minister's plans about unlocking private sector investment linked to the freight and rail system in South Africa? And then with regard, the second question is related to the delay of the results. According to rules, the results needs to be published within 6 months of financial year.
We have some interference. Could the person whose mic is on please mute? Thank you. Apologies, Suren, you can go ahead.
It's the delay in the results, the 6, you have 6 months to publish your results. I think it's just come afterwards. I know some GSE listed companies have had some leeway. Is this related to COVID, or, what was the reason behind this?
Thank you, Suren. Terence Krima?
Thank you.
You can go ahead.
Very much. Just in terms of the year to date, can you give us some insight into the operational and financial performance for 2021-22 year? You're halfway through that. Which areas have been particularly badly hit by the COVID lockdowns? And it seems like container volumes were already hit in the prior financial years. That trend continued into the COVID period. Secondly, following on from what Suren was asking, what priority projects in ports, rail, properties are you looking to partner with the private sector in? How and when will these opportunities be packaged and brought to market? And thirdly, please could you elaborate on zero-based budgeting? What does this involve? By when will the process be completed? And what is your target with regards to cost reductions or elimination of waste? Thank you.
Thanks, Terence. I don't see any other hands at this point, so I'm going to hand over to the panel to respond.
Do you want to do the delay in the results? Delay in the results? Do you want to run with the delay in the results?
Yeah. When you start.
Yeah, I think.
Thank you, Portia. So I will start on the results announcements. In terms of the results, Suren, yes, when COVID-19 hit, many entities were just about, entities specifically with 31st March year end, were just about starting with their audit processes. So in a normal year without COVID impact, we would have released our results, or rather gotten the signed off audit by the 31st of July. But when the COVID hit and the lockdown was announced, The National Treasury, as the regulator that looks at the timing of the 31st July, as I indicated, issued they allowed us to release the results only by 30th of September, which was giving us time to ensure that we can go through COVID and be able to deal with the issues. But also this 30th of September, because the PFMA allows us to release the results, I think about 5 months after the financial year has closed. So in a normal year, much as we would have released our results and submitted all the requirements by 31st July, we know that we have the regulated period is up until the end of August. So the fact that we are releasing our results at the end of October is totally aligned with the requirements and the regulation as per National Treasury. But also the Johannesburg Stock Exchange did extend the timelines in the reporting requirements like it was done for the listed companies. The focus was, however, to ensure that where we had any requirements in terms of our lending agreements to share our results with lenders, we highlight this allowed extension and ensure that if we release in October, we are not in breach of the covenants and any agreement we have, and we have dealt and continue to deal with that aspect of the lenders. But from the perspective of the regulators, we are well within what was allowed in the context of the COVID impact.
Thank you. So let me, on the private sector involvement and opportunities, we are almost finished with the strategy formulation process, but we still need to go through one, get to the board and then go to the shareholder. Once that's closed off, we will be able to come back and start talking about what the opportunities might be, because we obviously need to close off on that. Suffice it to say that it is a definite intent on our side to introduce those opportunities. We have 8,000 kilometers of our branch line, of our system, which are defined as branch lines, and we're looking at ensuring that there are economic opportunities on those and how we would support those. So immediately, that's a priority area that we're looking at. However, and maybe Sandra can talk a little bit about this, one of the critical constraints is that our concessioning or partnering model has not been the most efficient at all. And this is an area of urgent reform that we are working on, which we would then be able to come announce and have a process which is fast, effective to run these. So.
Thank you, Portia. Indeed, what we would like to ensure is that we move faster with the introduction of private sector participation, less cumbersome but compliant procurement processes, attracting the most competitive bids, and reaching financial close as quickly as possible. What we have found is that by the time that we reach financial close on most of these concessions, the economic landscape has changed dramatically and we need to recommence negotiations. We simply don't have the time. We want to give certainty to the private sector, and we want to ensure that there's a proper risk allocation between Transnet and the private sector. So we are doing a complete revamp of how we are going to introduce private sector participation, even considering auction models to ensure that we have swift transaction models. Thank you.
So I also just, one of the areas which, and I suppose in the progression of time, Andrew Shaw might speak a little bit more of, we are also wanting to strengthen the area of our commercial skills inside Transnet so that we would be able to improve the rate and the way that we do business cases. We find many a time that projects with negative NPVs are implemented, and it's an area that we just want to seize because we want to continue being able to fund ourselves. So on the priority projects, as I've indicated, at least 10% of our system is going to be immediately available for branch lines, and we will not be leaving you on your own to pedal your own canoe, so to speak. We will be sitting to see how we might support you. We've already started to talk to TE around how might we have a power by the hour sort of model that we make available for some of the players on the branch line space. I want to get to Nonkululeko, you and I should share the zero-based budgeting one. Zero-based budgeting is tough in the sense that you literally have to go to the base and start from the beginning. Now you can imagine that at Transnet with our size, it is a massive, mammoth task. We anticipate that this will take us a few years to get to closure. However, what we will be doing is identifying the key areas in which we need to start. When you zero-based budget, every single expense has got to be defended on its own merits. If you consider the fact that, to our knowledge, Transnet has never done a zero-based budget, so there are many costs that we've continued with as a matter of rolling activity, so to speak. So what this gives us an opportunity is to ask the question, do we need it or don't we need it, so that we can stop undertaking whatever expenditure. So Terence, this leads to the point that it's nearly impossible for us to say on the front side what is the savings we anticipate to achieve. And also we've been particularly careful by crafting the issue of costs as cost containment and cost compression as opposed to cost cutting, because we were very wary of coming in with an approach that says you cut costs, because invariably you end up cutting costs in areas which may be critical to the operations. I don't know, Nonkululeko, what you want to add?
Yes, thanks, Portia. You know, indeed, it will take us time, but we will start immediately to implement zero-based budgeting. We have a responsibility to issue a corporate plan around February next year, and we are exactly in that phase. We are talking budget processes. But to the point that Portia is raising is that we do not want a process where we say the cost base of 2020 was this much and just add an inflation number to that. And none of the projects are open. So we will leave no stone unturned to understand the makeup of the numbers, the makeup of the projects. The issue of the legacy projects that might have stayed in the system and continue to be budgeted is going to be an area that we're going to focus on. The issue of the procurement events, where the price for Transnet is basically what is in the budget rather than the fair and commercial price that we should be paying, is what we're going to have to look at. But also the issue of using the consulting services where we can do the work ourselves is the area that we need to look at. And therefore, over time, we will continue to look for areas. There is enough low-hanging fruit that we can already attack. And as we get to understand areas that we need and we don't need, all the way to the cost center level of the 55,000 people that we are, we believe that in managing the cost and reducing our borrowings, we need to find areas to improve the cost while we are looking for better revenue generation opportunities.
Sorry, and if I just, one area on the cost containment side is tied to our project where we're doing a root and branch review of our procurement function. And there we anticipate already cuts, savings of about 20%, because the intention then, as we've indicated, is to buy directly from the manufacturers themselves, and that we have already started processes, especially with high-value tenders and our high-value procurement items, to start renegotiating many of the items that we buy on a regular basis, so that we can see price improvements on our side.
Okay, thanks, Portia. We'll take the last round of questions. Ellen at Business Day, I saw your hand up. That is the only hand I've got on my side at this point. Okay, we have somebody in the room who has a question right in front. If we can get a roving mic to her, please. Ellen, you can go ahead solo.
Thank you. Alan Taken, Business Day. Minister, if you're still with us, I remember watching you grilling Anoj Singh about PFMA violations during a parliamentary hearing, and you had him looking extremely uncomfortable. I just want to know if you're satisfied that former executives like him and others are going to be brought to justice. It seems to be taking quite a long time. Secondly, what happens to, this is probably for the Transnet board, what happens to those who testify at Transnet? Is there anything there that you're hearing that give the board lessons on what to do, what not to do? And whether there's any legal action that can be taken against those people? And then thirdly, the 114 billion rand of irregular expenditure. Last year, I reported on a number of 49 billion. How do these two numbers compare, the 114 billion versus the 49 billion of last year? And I'll leave it there. Thank you.
Thanks, Ellen. We'll take the question from the room.
My name is Robiwa from ENCA. A couple of questions. You spoke about the remedial plan that you've been implementing after the audit report, and I just want to know if that includes recouping the monies that were lost to state capture-related activities. There was the 17 million the previous board chair and his board have said they're happy to pay back. Is that money that you will be going after? Just one example. And then also, you spoke quite a bit about maintenance and aging infrastructure and the operating costs and investments that you are making into the company. You did speak about it briefly, but just a further breakdown on capital expenditure when it comes to your aging infrastructure and maintenance. And also with COVID and the changing times, some of the technological advancements that Transnet has to make to adjust to the changing times, just the kind of expenditure you're looking at there. And then there was a story about tariff or due increases at the Cape Town port by almost 20%. This obviously comes as part of revenue collection for Transnet or other ports at Richards Bay, Durban, expecting the same kind of action in the medium to long term. Yes, that's all from me. Thank you.
Thank you. I think we'll give the Minister an opportunity to respond to Ellen's questions and then get responses from the rest of the panel. Thank you.
Thank you very much. Ellen, I'm glad that you still remember those late night sessions. As far as Mr. Singh and other culprits like him are concerned, they will have to account either through the Zondo Commission or directly through the Hawks and the NPA, and the sooner that happens, the better. But we are the executive branch of government, so you'll understand that it's up to those law enforcement agencies to do the necessary. But what we have learned from other SOEs as well is that the criminal route is one route. There's also a civil route. The chair of the board will explain to you some of the money that they've managed to recoup through the civil route as well. There's also the SIU tribunal, which I think was mentioned by one of the presenters, but that's another route through which some recoupment could actually happen as well. And then on the irregular expenditure, this is what I mentioned earlier on, that irregular expenditure goes to some of the contracting that happened from as long ago as 2011 onwards. And the challenge that we've had is that auditing firms that were responsible for audits during that state capture period did not uncover all the malfeasance that was going on at the time. And it is that we are asking some of these firms to account for and to explain whether they were willing or just silent partners in the state capture process. And if so, I think the board of Transnet will have to look at how that matter has to be dealt with. But similarly, as a department, we will also look at our options and ensure that that kind of professional conduct, which amounts to unprofessional, unethical conduct, but above all, it amounts to a lack of courage on the part of professionals to confront the wrong things that were happening during that period and take accountability for the wrong things that were happening as well. So the numbers can be explained by the colleagues on the platform, but some of these numbers go back to that period, and it is now that we are expected to account for things that have happened 7, 8 years ago as Transnet. And we are in discussions with the Auditor General and the National Treasury to, in a sense, ring-fence the state capture period so that that can be dealt with in its own right without contaminating audit findings in the current environment. But let me leave it at that, and my colleagues can answer. And if you don't mind, ladies and gentlemen, I'm going to now excuse myself and move into another meeting. Thank you very much, and thank you, Chairperson.
Thank you very much, Minister.
Minister.
Thank you, Ayanda. I'll comment on the 18 billion that we spent in the financial year and the question around the split. So the 18 billion was spent, about 3.5 billion went to expansion, and about 15 billion went to maintenance. And I think we do agree it's not nearly enough in terms of what we need to spend in terms of making sure we support and keep our infrastructure totally maintained. But it was useful in ensuring that we continue to support that. If you look at where it focused on, about 76 of this money went into our rail infrastructure to support the maintenance requirements in that space. The other question I want to comment on is around the numbers that were reported in the previous financial year in relation to the 114 billion. So the requirement in terms of the reporting of irregular expenditure is that when you identify expenditure in a particular year, you do have to go back and reopen your opening balances if it relates to prior years. So as we indicate that we have been at this journey for about 3 years, and in 2018, which was probably the first year where there was significant reporting, you will note that if you compare the financial statements of 2018 and 2019, the opening balances would have been updated, and the expenditure for the year would have been reported as the expenditure for the year. We had to do the same thing as we were disclosing more of the expenditure that related to the prior years, and therefore we've gone and updated the opening balances of irregular expenditure that we reported. However, I want to just highlight that this is not a restatement of our financial statement, because this note is talking to us disclosing our compliance to the regulation. The financial statements are not affected by us adjusting the opening balances. Hence, when you look at last year, you may not necessarily compare like for like the numbers that you saw, but we do disclose the cumulative numbers and the numbers that relate to the current year in this note 39.
Do you want to talk about the
with regard to the recouping of monies lost as a consequence of transactions during the period of state capture and as a normal course of business, Transnet has already instituted civil proceedings in 2018 with regard to former executives and companies that defrauded Transnet. We are intensifying our collaboration with law enforcement agencies to expedite the review and set aside of significant transactions through which we will be recovering losses. We have had excellent collaboration with our colleagues in law enforcement agencies, in particular the Special Investigations Unit. We are also exploring the fast tracking of our recoveries through the Special Tribunal, which, as you know, is set up to ensure a greater degree of responsiveness to recover losses due to state capture. So there will be a very intensified period of time in the coming months with regard to the recovery of losses.
So with regard to the question of the 20% increase in tariffs at the ports, the methodology spews out a number like 19.7%, but we haven't applied for that. We have applied for 3.8% for tariff increase. We can ensure that we provide you with a better explanation after the meeting. I also wanted to just reflect, Ayanda, briefly on the point that the Minister raised with regard to lifestyle audits. We have at Transnet undertaken lifestyle audits for levels A, B, and C, and we were also joined by the board as well. So 408 individuals did undertake the lifestyle audit. 96% was compliance was what we achieved. In the non-compliance were also some people who had left and also people who were suspended. We decided that we would get, so we have to talk a little bit with our CFO here on the side. Now and again we have to use consultants. We decided to use the law firm to run this process for us so that we would have a third party who was objective to the rest of the organization, given the fact that all of us, including the board, had applied. So the process where we're at now is that many people have received letters indicating that they are green. 31%, just over 31% of us are going through a process where they have to explain the causes for sometimes material concerns, and in some issues the fundamental non-compliance. When I say us, I use us in the collective. Some of us have been cleared. Thank you very much on that one.
Thanks, Portia. That's it from us for today. We've run out of time. For those members of the media who still have further questions, do reach out to us and we will facilitate that you get your responses. And for our partners in the investment community, thank you very much for taking the time to join us this afternoon. We will be engaging you further in greater detail on our financials. Thank you very much. That's it from us.